My name is Merilin Hörats.
Hi, I'm Silvia Manca.
And today we are here at Ugly Duck.
We will be taking stock about what we have achieved to date in the VC ecosystem, and we will be then focusing on the future funding cycle. In particular, by identifying the need to continue financing innovation, not to lose the breadth of the market. Second, by focusing on emerging themes of sustainability and impact-related investment. And thirdly, by identifying new sectors that will require more targeted form of interventions.
We will also mention a little bit what is awaiting us all in the future, what both you and we have to put in place to make sure that the future funding reaches these sectors that are most critical for the sustainability of our common economy and also for Europe. Thank you, Rachel, and good afternoon, everyone. As you just heard from Uli, how the VC market is doing, we would like to share with you a little bit how we see EIF's role in this market and what we, together with all of you, have achieved. But most importantly, how, what Pierluigi already hinted, what we see the future funding environment bringing us. So with that, to Silvia.
Thank you. I believe everybody in the room knows the EIF mantra, which is to making it easier for small businesses to get financing. And one key aspect in doing that is actually to deliver funding to the market by catalyzing public and private investments. That way, we could help build self-sustainable ecosystems over the long run. This community has done a marvelous job when it comes to the European VC ecosystem. But actually, what the EIF could do to support you throughout this journey? We could, for instance, help building market infrastructure when non-existent, for instance, in presence of market gaps. We could ensure a proper sector and stage diversification. We could ensure a proper geographical balance and coverage. And to this end, together with our mandators, we design and implement focus strategies that ultimately result into a bespoke and highly diversified set of financing instruments. That might go from launching pan-European and far-reaching programs to boost competitiveness, for instance, right down to kickstart an entire venture capital market in Bulgaria, as presented last year, for instance. One key ingredient in order to do that is to have strong partnership and to rely on strong cooperation amongst all the stakeholders of this very same community. Therefore, all in all, our funding approach and consequently our investment approach builds on this and other elements, and more importantly, strive to adapt to market environment and market evolving, which is nothing else indeed than the results of our society changing.
Now, one of the key dimensions that Silvia mentioned is the partnerships with our mandators. Now, as you know, EIF is essentially an asset manager. It is our role to ensure that the money entrusted to us is being put to work smartly, that it works for the market and not against it, but also that our mandators' needs are being respected. Now, over 2 decades, EIF has been managing mandates mainly by the public sector, institutions like the European Commission or the European Investment Bank. In recent years, we've also tried to engage more with the private sector and bring private money earlier on into our overall resource mix and blend it seamlessly together with the public money. Now, what does it all mean in practice? How do we achieve our catalytic role? Equity mandates are approximately 40% of our mandates, and approximately half of it goes to the venture capital market. Now, this is almost 13 billion euros and has allowed you to raise an additional 40 billion, which means that we will able to invest into the VC market 52.6 billion euros. Now, this is a 4-time leverage of our resources. Together, to date, we have already reached 7,500 companies across a multitude of sectors with very diverse strategies.
Now, The VC ecosystem has evolved significantly, as we just heard. And collectively, we have built the breadth of the market. Now, on the EIF side, we have come a long way since the very few investments back in '98 to reach an amount of 1.4 billion of commitment in 2018. Countries and markets that in the past relied on a very sporadic investment activities, they can now rely on a more systemic approach. More than 12,000 registered patents are present in our portfolio. More than 150 IPO companies listed in more than 20 international stock exchanges. So, is it our job really done? Not by a long stretch. We have to focus also on building the depth of the market. And more importantly, technological advancements have triggered new challenges, for instance, related to the cybersecurity attack. Aging population is triggering water and food scarcity. You might have heard that on Sunday, a funeral took place in Switzerland for a glacier that has evaporated due to rising temperatures. Not to talk about the geopolitical turmoil. So, clearly, we are going through major transformative changes. And I believe I can speak for all of you when I say that we want Europe to be at the forefront of these changes. So it is against this background that we have identified three key important dimensions in our funding approach. First, we believe that financing innovation remains a must, precisely not to lose the breadth of the market. Second, the emerging of sustainability and impact-related investments, either as a standalone programs or as a cross-cutting dimensions across the entire value chain of financing products. And thirdly, we are seeing a logical progression towards more targeted form of interventions, more verticals, including with respect to strategic sectors that will be important for the competitiveness of Europe.
Now, these views and projections are also shared by you. As we also looked at the VC survey that was mentioned already today, we noticed that many of you have identified that in your future portfolios, there will be a bigger increase to these sectors and challenges that Silvia just mentioned. For example, blue economy, space, social economy. Now, looking further at the funding priorities, we have identified 4 key areas that have emerged from all of this. And one of them is being digitalization. Now, to ensure Europe remains competitive on a global scale, one utmost important area to further develop and focus on is digitalization. Allow me to give you an example here from my home country. In Estonia, over 90% of all e-services, also public services are e-services, they're accessible online to the citizens. If I would do my tax declaration, it would take 3 to 5 minutes. Registering a company online takes about 15 minutes. Since 2005, I've been able to vote online wherever I've lived in the world. Now, these public and private services combined have been estimated to save the government and the citizens annually an equivalent of 800 years of working time. Now, I'm not sure who made exactly this calculation, but it's very clear to see that digitalization has already changed the way we live and work. Smart devices, smart services and programs, they have reduced repetitive and boring tasks from our jobs and also from our everyday lives, and they allow us to focus on tasks which actually create value. Now, going further in the next decade, the Internet of Things, artificial intelligence, blockchain technologies will be further providing us with new smart solutions that will make our economies more efficient and maybe this way even help us tackle climate change.
Now, I come from an island, Sardinia, which has one of the largest percentage of people living past 100. I grew up with my 2 grandmothers who lived at the grand old age of 95 and almost 100. And as I became adult and having a rather active life, I remember asking them, okay, what's the secret of your well-being? Simple things, they said. A glass of wine every day, milk eggs, and meat from the local farmers, sea breeze, and a solid network of relatives and friends. Easy, right? I'm afraid that the world of today looks a little bit more complex than the one in which our grandmothers probably grew up. And therefore, I'm not sure we can rely entirely on this model to promote, for instance, an economy of well-being or a more socially inclusive economy. Let's take a look at another pressing societal challenge, gender equality. It has been estimated that the cost for lowers a women's employment rate is 2.8% of the EU GDP. Now, clearly, complex challenges in a complex society require innovative, agile, smart, and often prevention-based solutions. And once again, entrepreneurship has proved to be a successful tool, amongst others, of course, to tackle these challenges. These pioneers that you have helped to emerge are now placed at the strategic segment of the European economy. Our collective effort, therefore, should go to make sure that these guys have a suitable funding infrastructure and that they don't face even more challenges than the normal SMEs when trying to get access to finance. At the same time, effort should also be put in changing the mindset that still characterizes this sector, where these entrepreneurs active in a variety of fields for employment, social inclusions, life sciences, just to name a few, are sometimes not recognized as economic actors. Therefore, building on the toolkit that we have put forward already together with the Commission, with the EIB, with our regional partners, MPI, private investors, we would really like to bring this to the next level. And sectors of target will certainly be employment, social inclusion, alternative and innovative healthcare solution, elderly care, childhood, lifelong learning, skills, investment in human capital, just to name a few.
As we see in our daily news feeds, climate change is the challenge of our time. Now, financing the transition towards a low-carbon and green economy and promoting environmental sustainable growth is a big challenge for policymakers, but also for the financial sector. The Paris Agreement stipulates that the financial sector needs to play a key role in this transition. And consequently, we believe that both you, fund managers, and EIF will most likely be asked to put in place additional checks and balances to make sure that from the future funding round, areas that might jeopardize this climate neutrality goal are not getting funded anymore. Now, many of you are already investing actively into founders that are focusing on climate-friendly actions, and we believe that the future public funding will incentivize climate-friendly activities even further across the whole policy sector in all dimensions. And we in EIF will be there to build the necessary infrastructure to support you.
Now, besides these three pillars, there is the fourth one, which is equally important, competitiveness. And this is indeed an horizontal dimension that is valid across the four pillars. Now, the key question here is, how do we allow for a plain level field for European companies to kick off their business, to scale up their business, and to compete internationally? Now, sorry to use a bit of a buzzword, but the key will be certainly to have programs that will contribute to the capital market unions and to the strengthening of the single market. On top of that, as we heard previously, there are also strategic sectors that are emerging and that will require our attention, like the new space economy, like defense, like sectors related to the new industrial policies. Let me give you now an example of an important public funding program. You know that the EU adopts a 7-year programming period, and next year, the current funding cycle will expire. The European Commission has therefore proposed for the next multi-annual financial framework starting in 2021, a single guarantee fund, the so-called InvestEU, which is a program of 38 billion aiming at triggering additional 650 billion of public and private investments in selected policy areas. These are sustainable infrastructure, research, innovation, and digitization, SMEs, social investment and skills. Each window will have a dedicated budget and set of priorities that will then be pursued through the underlying investments. Now, probably many of you are familiar with acronyms like FC, COSME, Innofen by negotiating the side letters with the EIF. And the idea under InvestEU is to bring all these programs under one single roof, so to simplify and streamlining the procedures. Now, moving ahead, what comes next? We believe that our funding approach going forward will be built on 4 key dimensions. First, doesn't come as a surprise, adapt to market environment. That concretely for us means continuing to ensure this virtuous circle between the policy objectives and the market instruments. And we will do that in a concrete way, for instance, by organizing dedicated workshops with the experts, like the distributed ledger technology or the life science workshops that many of you attended. We will do this by piloting innovative and new instruments and then bring them to the next level if successful.
We will also continue building on synergies. Firstly, on synergies between the public and private sector, and this way hope to catalyze even more funding to the VC market. Now, the challenge still remains to find a fine balance between the market and the policy, and to design instruments that are flexible enough to adapt to the market condition. Secondly, we will actively mobilize even more private funding into the VC market, for example, through the Asset Management Umbrella Fund, which provides institutional investors access to investment-grade funds. And thirdly, we are also in dialogue with corporate investors. Just 2 weeks ago, we signed a memorandum of understanding with EIT Health, which is a network of medtech, pharma, research institutions and universities, all helping the health sector and ICT.
Thirdly, the market development. This obviously goes hand in hand with the new challenges. And one of the most striking ones that you also have indicated in the VC survey is the exit environment. Clearly, the late-stage financing in Europe remains underdeveloped. We clearly recognize the importance of having a well-functioning IPO environment. Therefore, we will be looking at ways to stimulate investors' interest in this area, amongst obviously other priorities.
Conscious and sustainable finance is critical to achieve the environmental and social challenges that we have been mentioning. As individuals, we can decide on a daily basis how to deal with these challenges, be it by buying fair trade products or driving a hybrid car. Now, as an institution, we have done a lot as well. On one side with the investments we have made, and on the other side with our internal procedures and policies. Now, we have brilliant examples to showcase from SMEs in our portfolio, from the clean tech funds that we have invested into, or the social impact funds. On the other hand, we do extensive risk and compliance checks on all of our intermediaries, and we have a restricted sector policy. But nevertheless, we see that in the changing market and policy environment, we might be requested to put in place additional layers to see that, that going further, these sustainability matters will be more in the forefront, both in our investment approach, but also in the communication that we make. And therefore, we fully expect that this will be also reflected in our investment approach going further.
Now, to conclude, it is against this background that we are now in active discussions with our existing and potential future mandators. And it is important to mention that a number of programs related to the priorities or the objectives that you've just heard, either via mainstream channel or via pilot initiatives, are already available or are in the making, precisely to pave the ground for this next generation of funding. So this being said, what is our vision for the future? Certainly, we want to stay true to our own identity and be there where we are needed. We also want to continue to be a stable player in the market. And we want to continue to be bold in supporting entrepreneurs of today and of tomorrow that you have helped, will help to emerge, to succeed, and be equipped for the new upcoming challenges. Thank you very much.
Thank you.